Anthony, thanks so much for joining me.
Thanks for having me.
Why don't you take me back to those most important influences that led to your interest in business entrepreneurship investing?
I think of business really as maybe three components. One is competition, two is leadership, and the third thing is solving problems. And from a business perspective, competition is probably one of the areas that people don't really like to talk about that much because it kind of feels like it's a zero sum, I win, you lose. And then you have like the Peter Thiels of the world who talk about like competition is for losers, et cetera. But I think playing sports growing up, I played football, basketball, and baseball in high school. I was very competitive, always wanted to do a good job and felt like that was where I excelled more than maybe in the classroom. And so I don't know if you're born a competitive person or it can kind of be created, but I think that was probably the biggest thing of just, okay, my body probably won't support me like being a professional athlete, but what's like the next sport to play? And so I think business and investing is, I always say that like investing is the sport for thinkers. And so the competitive nature comes through. On the leadership side, I think when you play sports, naturally, some people gravitate towards, being the leader of a team, a school or whatever. But also I think the military and the experience I had there kind of cemented a lot of the lessons learned and the impact of leadership and things like that. And then I think that solving problems really was kind of more of a family influence. So I grew up in a house where my father, he kind of had two different careers. For the first half of his career, he worked inside of a corporation, and did a great job and continued to kind of move his way up in the corporation like many people, I think, of that generation who kind of picked a company and stayed there for 20, 30 years. And then he started to become more entrepreneurial later in his career. And so you kind of got to see the ups and downs and the stress and the excitement and, kind of all of those things. And so naturally you say like, what is business? And it's kind of just like solving a problem and, okay, well, what problems are out there that I could go try to solve? And so I think it's those three things kind of coming together really stoked the interest.
From your time in the military, you hear a lot about leadership skills in the military. What was it that you took away and how'd you learn it?
I think that there is kind of experiential leadership, and then there is more academic leadership. So academic leadership, I was very fortunate. Obviously, everyone goes through basic training and you get, what I would consider kind of like the 101 of leadership, kind of, hey, don't ask people to do things you're not willing to do and some of that stuff. But I also got to go to a number of schools that were specifically focused. There was one in particular, an infantry leadership school. And so you can imagine, not only are you being taught kind of leadership tactics on the battlefield, but also how do you manage these teams? How do you motivate these people? And these aren't, accountants or, chefs. These are people who are going to go and fight. And so there's kind of elements to motivating that group of people, maybe more so than elsewhere. That academic leadership, the military and the Army in particular, is probably one of the best institutions in the world to teach that stuff, right? They've really studied it. They've got a lot of kind of real world experimentation of what works and what doesn't. They've had years and years of getting feedback in different environments, in different geographies, with different languages, with different types of people. And so they've really perfected, here is how you do this. All of that academic leadership kind of makes you feel good and gives you some confidence, like, I think I'm a good leader. You don't actually know until you get the experiential component. And for me, I think that there was maybe two different elements that really kind of, cemented it. The first was I was very young, right? I joined the military when I was 17 years old. I signed up with a contract where I was going to go do reserve duty first, and then I would do active duty afterwards. In that contract, it allowed me to go to school and play football. And so I did not do ROTC. And so I get deployed when I'm a junior in college. So I'm not protected from deployment. I'm 20 years old. Well, the people around me are not 20, right? These guys are in their mid to late 20s. They have families, they have mortgages, they have children. They kind of have like life going on. And so if you're in a leadership position at 20, 21 years old, how are you supposed to manage not just people who are older than you, but people who have very different life experiences than you? And so it just kind of having the academic component meet the real world really helped me kind of figure out like, what did they teach me that actually is applicable here? And then what are the things that maybe I can ignore for this specific situation? There's an element of leadership also that you then almost get like a feedback loop, because in the military, there is some hierarchical leadership in terms of I have a certain rank on my chest, you have a different one. Either you're in charge of me or I'm in charge of you, right? Like we walk around with it on our chest and we kind of know what the hierarchy is. When you go back into the business world and the private sector, that doesn't exist as much. And so now you're much more kind of influential leadership. And so again, kind of what is the experience? How do you learn this stuff? And I remember when I went to work at Facebook, I was a product manager. And a product manager is a very interesting role at a company like Facebook because technically the engineers don't report to you, the designers don't report to you, the data analytics people don't report to you, but they're all on your team. So they have their own, data analytics manager. They have their own engineering manager. They have their own design manager. But you as a product manager are supposed to bring together all these different functions and have the team work together. But you don't have any kind of hierarchical leadership capabilities over these people. And so it's all influence. It's all motivation. It's all these kind of like softer skill things. And so for me, in a very short period of time, about 4 or 5 years, I got kind of a crash course in the academics, the kind of real world, physical kind of hierarchical leadership, and then kind of this more soft skill, corporate type leadership. And I'm really thankful for just kind of going through that crash course because it gave me the tools that now when I go into a situation, what is the tool to pull out, for this specific environment?
What are your favorite tools of influential leadership?
I would say one of them, which frankly, I wish I could take more credit for like master planning a lot, but is doing really small things. I'll give you a concrete example, which is here in our office, one day we hired somebody that was new. And 2 or 3 days after they started working here, they said to me, "Hey, can I talk to you for a second?" Okay. And they pulled me into my office and I thought I was like at the principal's office, right? They said, "I saw you yesterday loading the dishwasher." And I said, "Yeah." And they said, "Why were you doing that?" "Because there was dishes in the sink." And they said, "Oh, don't you think that somebody else should do that? Like that's not a good use of your time." I said, "Well, I never really thought about it before, but the fact that you noticed means that other people are talking about it and maybe it'll inspire somebody else to go and, take the dishes in the sink and put them in the dishwasher." And so I think there's little things like that you can do. What time you show up, how you dress, do you empty the dishwasher? Do you take the trash? I mean, like really, really stupid things. But I do think that, especially people who are more senior in an organization, showing that the work's got to get done. And it doesn't matter what role you are, like kind of we're all in this together, is a way to implicitly teach the leadership and kind of show people the right thing to do so they can emulate it. And then I think that there's an element also of holding yourself and others to a high standard of excellence. And what I've found in my career is there's kind of a bifurcation with people. When there's a high standard of excellence, some people run away from that. They actually do not want that. They want to kind of hide. They want to, just go home at a certain time. They want to have a certain type of lifestyle. They're not ambitious. They don't work hard, all that kind of stuff. But the people you want to be around, they actually aspire. Like the higher you put the standard of excellence, the harder that they're going to push towards it. And so in a weird way, it's kind of like an anti-sell, right? I was talking to someone that we're recruiting for a role earlier this morning. And I said to her, I don't try to recruit people anymore. I'm not going to try to convince you for this. I've told you how we operate here. Deep down, either this is for you or it's not. I don't know you well enough to tell you whether it is or not. I know you can do the job though. Go think about it for a couple of days and just trust your gut. You'll come back to me and say yes or no. And so that person now has to make a decision. They know where the bar is. They know kind of what the tempo is. They know what the expectations are. It's kind of like, are they scared of it? Then they probably won't do it. Or are they like, hell yeah, let's go charge the hill. Those are the people we want.
So take me through to your time at Facebook. Some of these principles now you're putting into practice, early work experience. What happened during your time there?
Before I went to Facebook, I had built and sold, and I'll kind of put sold in air quotes, 2 software companies. We raised no outside funding. They basically were as successful of a failure as you could create, right? Which was, they were great in terms of learning everything that you probably shouldn't do, very unscalable. But I think I've always just kind of figured out how to get things across the finish line. And so made a little bit more money than friends who went and got kind of real jobs. And so that was probably also an element that kind of kept me going, was like, all right, well, at least I didn't, I made a little bit more money than they did. But it was very clear to me, like, hey, I don't know how to do this on a bigger scale with more success. And so I can either keep bashing my head against the wall for a number of years and hope that just one day it like falls from the sky, or I can go learn. And I thought that I had 2 options. One was to go to business school and kind of pay to get the education, or I could go and I could get a job somewhere where I could, learn through osmosis and get paid to do that. Getting paid versus paying sounded a lot better. And so frankly, I would have gone anywhere. I would have gone to Google. I would have gone to Facebook. Like just whoever would have me, I was excited to be there. And the way I got the job is probably pretty important to kind of understanding my journey at Facebook, which is I was talking to a recruiter and he said, well, would you be a product manager? And I was like, yeah, of course. Like, sure. And I really didn't know what a product manager was. And so they flew me out there to do the kind of final interviews. And on the way to the airport, I bought on Kindle, The Art of Product Management, which I had Googled around and found that was the best product management book. And I read the full thing on the flight. And the next day I went into the interviews and I basically regurgitated everything I could remember from that book in the interview, right? And it worked. Barely, but it worked. And so I was kind of showing up as like, hey, I'm probably above average intelligence. I'm really willing to work hard, but I'm not coming here with any prior knowledge. I'm not coming here with bad habits. Like mold me, right? Teach me how to do this. And so I first started working with a team that was focused on Facebook pages, which is kind of their business product. And I was 25 years old. No one had really worked on this before. And they were like, go grow the number of active pages on our platform. Okay. I did not know this about myself at the time, but if you put a metric in front of me and tell me to move it, I become like obsessed, right? It's just like, okay, let's do that, right? It's very manageable for me. And so very quickly, we started to move that metric substantially. And it was simple things. It's like, why don't we change the color of the button that says create a page from blue to green? Like, I bet you more people click on it, right? Well, did they? Yes. Okay, what about a darker green or a lighter green? And so you just like play this game and you learn that it's a very data-driven kind of optimization culture. But you could see the real world impact. We were able to create tens of millions of these pages. Those people became advertisers. There was a lot of money that dropped to the bottom line of Facebook. And so it's very rewarding. One of the important lessons, though, was I remember after the first 6 months or so of doing this, there was, a big quarter of Facebook, and we could very significantly see, okay, the work we did attributed to this revenue, which attributed to these earnings, the stock price goes up. And, we had a little bit of stock, but, if you own the business, that's your money. If you don't own the business, that's not your money. And so there was this element of like, hey, I just went from kind of running my own businesses, and sure, you get a lot of the headaches, but you also get the reward, and understanding that, hey, these big businesses, there's different positions inside of the business. After that, the most formative thing that I did was I went and I worked directly with Mark Zuckerberg and Sheryl Sandberg. There was a 3-person team that was assembled. It was a 90-day kind of special project, if you will. And the whole goal was to help those 2 individuals grow their following on Facebook, which when I tell people that, they always think it sounds a little almost like vain, but really in hindsight, they were ahead of this trend of going direct. So some of the comments at the time were, hey, there's 1.5 billion people on our platform. I only have 9 million followers as Mark Zuckerberg. How do I talk to the audience? And to their credit, which they'll never get enough credit for, they said, we don't want to change the product. We don't want to boost ourselves in the algorithm. We don't want to take over, the website. We don't want to friend everyone like MySpace Tom. Like, we want to learn how to do this. And for 90 days, we basically just ran a bunch of tests. Put their faces in the photo, take their faces out, say a certain comment, take, a different language, put their dog, and you just learn what are the things that work. The reason why that was so formative was, one, I got an up-close look at 2 of the best operators in Silicon Valley over the last 20 years, 25 years. And probably one of the biggest things that was, you have these moments where something gets kind of seared in your brain and you just can point back always and like, hey, that was the moment I learned that. We're sitting in a room. There's maybe 15 people or so that are meeting with Mark. And there was a presentation. And I actually don't remember what the actual feature that was being debated, but I remember it was an important one. Kind of not a bet the company, but kind of like a, hey, if we mess this up, there's probably going to be some damage here. And it's like, let's make sure we get this right. About halfway through the presentation, all of a sudden Mark says, stop, go back a slide. And he starts talking about why one of the screenshots or mock-ups doesn't have the exact color of Facebook blue. And I remember just being like, did this guy just go from like the 10,000 foot, like what are the strategic, elements of the business to like, what's the pixel? Okay, go to the next slide and then back up. And I was just blown away at the level of detail orientation while still having this kind of very important, larger strategic conversation. So I walked out of the meeting and I remember asking my boss saying like, hey, that was kind of crazy. Like everyone else seemed like that wasn't a big deal. Like that's the craziest thing I've seen in business. What's up with that? And he said, you have to remember that Mark has more context than everybody else. He remembers when we picked the Facebook color blue. So when he sees something that's off, he's been staring at it for a decade, right? Like he knows exactly what it is. And so he cares. He it's very important. And it was all these kind of like lessons that came out of that. But you just realize like to run these companies, I always laugh. People, critique whoever and they're like, oh, they're dumb or, they're nefarious. You don't build these big companies without really working at it. And the last thing that I learned while being there is the last team I worked on was something called the Social Good and Goodwill team. And that team was tasked with a pretty interesting mandate, which was go do good things in the world using the size, scale, and advantage that Facebook has, but don't worry about making money. Now, the don't worry about making money part was very antithetical to what Facebook was doing up until that point. But what we were able to launch are things like Amber Alerts on Facebook, voter registration. And so these things that you could see like real world impact where you're saying, wait a second, these things are not just having an influence in society, but they're actually platforms where you can communicate certain things. You can have calls to action. And you could see even in 2014, 2015, hey, they're important already. But these things are going to become significantly more important, moving forward in the future. And I think that probably they've blown us away by just how, integrated into our lives they've been over the last decade or so.
How'd you take the lessons of building up Mark and Cheryl's Facebook following to doing it effectively for yourself?
So after I did it with them, and I should caveat that working with them is very much like, almost think of us as like research analysts, right? It's me, there was an executive speechwriter, and there was a VP of comms. And so I was crunching numbers, looking at impact of things, kind of doing that stuff. The executive speechwriter obviously is writing everything. And the VP of comms is thinking about kind of, impact of words and kind of strategy and stuff like that. But what you realize is like, there is a science to this. There is an ability to unpack what you say, how you say it, what the wrapper, the content type, like all these things can definitely move the needle. And if you have the time and the energy and I think kind of curiosity, you can figure out how to grow. And so probably the most important thing other than how they operated was just like, there's a science here if you're willing to put the time in to understand it. When I left that team and was still working at Facebook, there was a lot of other people that were really on Instagram and they were trying to figure out, hey, how do we come over to Facebook? And so probably the most well-known account was an account called F Jerry or Fuck Jerry. And they had, a couple million followers on Instagram at the time. And somebody at Instagram was like, hey, you should also like do Facebook. They're like, well, how do we do that? And so somehow I became one of the people that they would get funneled to. And so I would help these people. And, it's somewhat basic stuff like, hey, you should post more than once a day. You should, the best jokes on Instagram, probably going to be the best jokes on Facebook and stuff like that. But after doing this for a couple of years, even after I left Facebook, I realized I said, I've helped all these other people. I've never done it for myself. And so I went back and I looked one day and in 2016, I think I was like slowly almost like red pilling myself because I was tweeting things like audience is the new currency and, like all these different things about kind of thinking about the world, but I was talking about things I wasn't doing. And so in 2017, I said, hey, why don't I take what I've learned and go and figure out how to do this for myself? But if you think about what did I do? I basically just did a lot of kind of scientific investigating of try things, see what works, iterate, try things, and just kind of do this over and over again until you eventually, really you're training an algorithm. You're training your own algorithm. So to the point where today, if you show me 3 tweets, I can probably tell you which one's going to go viral. But it's just you've been doing it for a decade, right? You've been, thousands of tweets, tens of thousands of tweets. And you're like, okay, maybe we were just doing some of the machine learning stuff before it became cool.
Where did you take all that? In terms of like, it's one thing to be building your social media profile. It's another to be turning it into some form of a business.
I think a lot about like, why did I do it? There's trade-offs to doing this. It's a lot of time. It's a lot of energy. There's a lot of risk, frankly, in terms of people expect you to talk about certain things that maybe if you were in private conversation, you may not actually talk about, right? And so like, how do you think about what are the trade-offs? What is the experiment or the timeline if I hadn't done this? And, do I regret doing it? Thought quite a bit about it. But if I go back, I frankly think I did it out of necessity, which was when I started investing in 2016, I wasn't living in Silicon Valley anymore. I didn't necessarily have a reputation as an investor. I remember that there was a couple of deals that I tried to get into and I didn't get into them. And I was trying to think about what can I do so that every time I want to invest in a company, it's an automatic yes. And I frankly didn't know what that answer was. But one of the things that was kind of a hypothesis was well, maybe if I have a big audience and I can go to a founder and I can say, hey, if you take this money, I will be able to help you get the word out about what you're doing. And so that proved to be true over time. But I think that was kind of the driving point. And so as I started to create the content and kind of build the audience, I was very focused on it. You know, I one time read that every single day, Mr. Beast would wake up and he would just obsess over YouTube. And he had this group of people he would talk to for hours about the thumbnails and the lighting and, you know, all these different things. Maybe it wasn't to that degree, but I was pretty close in my obsession of like, how does this work? Because I really thought that there was a lot of value on the other side of it, but there was kind of this problem standing in between me and the solution. And so as the audience started to grow, the first like implementation, if you will, of leveraging it was just to get access to private venture capital deals. And the very first fund that I ever managed was about a $3.5 million micro VC fund. It's like maybe the biggest LP, you know, was externally was like 100K. You're like me and a buddy, and we're like, are we good at this? Do we like doing this? Can we do just enough money to prove that we know what we're doing? But also like if we lose the money, people aren't going to be like super pissed at us, you know, kind of like you're almost like scared to commit to it. Right. And by the end of us deploying that fund, it was very clear having the audience is going to be a significant advantage going forward. The fund, you know, we ended up, I think we are seed investors in 4 different unicorns in that fund. Just everything kind of went right, which was nice. But then from there, I think I started to ask myself, you know, hey, what else can you do when you've got an audience? Where else should you be? And that's where I think we started to put a lot more effort into it.
When you started thinking through that, where were you in the audience? And then what is it that you decided you wanted to do?
I think I had 2,000 followers on Twitter at the beginning of 2017. I ended that year with 100,000, which was a different time on the platform. You could grow, I think, a lot easier, but you know, it was definitely headed in the right direction. And I just focused on Twitter from January of 2017 until May of 2018. So almost 18 months. And I say that because I think a lot of people at the time were like, you have to be everywhere. You know, you got to be on Facebook, you got to be on Twitter, you got to be on Instagram. Like also, whether I was just like too maniacally focused on Twitter or there was some broader strategy, I'm not sure. But I just focused on Twitter. And so around that time, I probably was like 150,000 followers, give or take. And I started to talk a lot more about Bitcoin. And I always wonder, was it because I thought Bitcoin was something, or was it because every time I talked about it, it went super viral? And so then I like got pulled by the audience. It's probably a little bit of both, frankly. But as I was talking more about Bitcoin, in 2018, there were a number of large accounts that got deplatformed. And so my thought process was, I don't really talk about anything that was controversial. I don't talk about politics or anything like that. But this Bitcoin thing is kind of at an interesting crossroads. I don't know if the government's going to like this or not. I'm talking about it a lot. It's not the furthest thing in your mind to think about one day they just say, hey, you know, let's just take all these accounts off the platform that are talking about this stuff. And so I realized, I was like, I've put 18 months of effort into this. I've got this, you know, big audience now. What if it gets taken away? I've got platform risk. And so I started writing a daily email. And the idea was, can I move the people from Twitter to also the email so that, you know, if something ever happens to Twitter, I can write the email. I did that for a few months. And then I started the podcast in August of 2018. And I think 2018 was the year where I really went from like, it would be cool and it's a hypothesis of audience is important to, okay, this is going to be very valuable. How do you now start to think about what you're doing as maybe not a business from a monetization standpoint, but think about it from a like a product standpoint. You would never take platform risk with a product that you want to grow into something big, right? You would never just focus on all of your effort in one type of content. You would start to do audio, video, text, right? Like all these different things that were really kind of business, you know, approach, but looking at it from a content perspective.
And where does that sit today of sort of just general numbers you're following across platforms?
We probably have one of the largest kind of independent media platforms across the different things. One of the things that's really interesting about kind of content and these platforms and social media is a lot of people get big on one platform. And so they'll have a really big Twitter account. They'll be like okay in other areas. They'll have a really big podcast. They'll be okay in other areas. We, probably because we started a little bit earlier and also we're very intentional, are big on a lot of platforms. So there's 1.6 million followers on Twitter just in my own account. There's about 600,000 followers on YouTube, which is probably one of the bigger ones. There's 260,000 people who are very kind of wealthy, sophisticated investors on our daily email list. And then we've got kind of a number of other platforms that are, still growing, LinkedIn, Instagram, et cetera. And the podcast is pretty unique in that most people's podcast is audio first, right? The audio is the big area. We used to be bigger on audio, but over time have actually become much bigger on video. And so the average episode probably will do anywhere between 100 to 150,000 downloads on that. And the nice thing about being big on video is you have the discoverability where they can go very, very viral. And so we've had, episodes that have done millions of views, et cetera, on that platform as well.
So once you've built that following, how did you then use it to lean into the investing side of what you're doing?
Yeah, I think getting access, right? Like venture capital, I think that we really went through a kind of 3 eras, if you will. There was the pre-2010 era where frankly, venture capital was not cool, right? It was like Wall Street and hedge funds. And I always joke, like you can tell where society is based on movies. And so like Wall Street movies dominated the 90s and early 2000s, right? But the 2010s were dominated by like The Social Network, right? And movies like that. And so I think that the like this isn't cool was really where it was almost like a craft, right? It was like people, you really had to love the game. You really had to be thoughtful about this. Capital was hard to come by, et cetera. 2010 to call it 2022 was this epic run where like the world discovered venture capital as an asset class. A lot of young, smart people started to really spend their time there. A lot of founders realized that you could raise a lot of capital in a kind of attractive terms from there. And so it led to this explosion of innovation and technology and all of that. And you kind of just had to be in the right asset class at the right time, right? And so I know a lot of people who, they're smart, they work hard, but if you go and you ask them, they're like, hey man, just like I invested in my friends. I just happened to live in San Francisco in 2012 and all my friends were starting companies and like one of them was named Uber, right? And like that worked. And so that 2010 to 2022 timeframe, I think was very much about access. It was clear like we are in this secular, bull trend. It is very clear what a good company in terms of like the founder makeup and the early signs, et cetera, looks like versus, maybe elsewhere in the country is not necessarily have all the network effects and capital, et cetera. And so the audience was used specifically to get access. I don't think that we had any other advantage than we could show up. And if we wanted to do a deal, we got to do it because we had the audience. There was probably some deal flow advantage. People would send us deals knowing we had the audience, but really it's just, again, access. In 2022, I would say, or like end of 2021 and the beginning of 2022 is when I realized that I think 2 things. One, I became much less excited about Series A and beyond venture capital as an asset class. A big belief there was, QQQ's been compounding it, call it 13.5, maybe 14%, depending on what their starting point over the last decade or so. The average venture fund, if you give them all the credit for their paper marks, it's like 17% a year or something, right? Maybe 18%. So if you just kind of average out the numbers, it's about a 400 basis point of outperformance looking over the last decade. And what you gave up is about 12 years of liquidity. Probably a pretty fair trade, right? If you could stomach the illiquidity, get 400 basis points of outperformance, great. Now, what we've seen over the last decade or so is so much capital come into the market. Maybe there's been an incremental increase in the number of good companies created every year, but it's not kept pace with the amount of capital. And so my thought process is those returns will get compressed down. We'll go from 17, maybe we go down to 15, which doesn't sound like a big change, but now what you're going to ask LPs in kind of that Series A or later is, hey, stay illiquid for 12 years for 200 basis points of outperformance. Still some, that's great, and we should do that. And others, that's not going to sound as exciting. And so moving forward, I basically said to myself, okay, well, what is the area of venture capital that will always be insulated from market cycles? And I came to the conclusion that the act of creating creates value. So if you go from 0 to 1, there's nothing here, now we have something, you're creating some value. How much value depends on the company, the sector, all that kind of stuff. But that earliest stage is kind of pre-seed and seed will still have opportunities to invest. And so it's an access game, it's an awareness game. And now I think there's beginning to get a separation of the best early stage investors and kind of everybody else. And so people understand that the best investors are known to be the best investors. There's some signal value to having them on your cap table. They will, spend time, they'll wait for you, they'll do a lot of things to get you into the right rounds. And so you want to continue to play in that area. The other thing that a audience gives you is an advantage, not just in investing, but in building. And so in 2022, I started to think a lot about, well, hold on a second. I have this massive audience. Right now, we are giving capital to entrepreneurs, and then we are basically helping them grow their business. But it kind of seems like a raw deal if, I give you $100K and I own 0.1% of your company, and then I go and I create all this value. I'm happy to help you, right? That's awesome. That's part of my job. But what if maybe we own more of the company? What if we start some of the businesses? And so over the last 3 years or so, that's what we've been doing. We've created an investment firm where we've created 9 of these businesses. And the goal really is, how do we create businesses in certain sectors where we have a competitive advantage purely through distribution? And it's not my original idea. I stole this from people who are much smarter than me. And Logan Paul has done this with kind of drinks and CPG. We've seen Mr. Beast do this over and over again in the kind of the food sector. We've seen Ryan Serhant do this in real estate, right? This is a known model at this point. You can even look at the Kardashians and just the size of these audiences and the scale at which they're able to do this. But none of those people really are business people. Most of them are focused on what I would consider mass market consumer type products, because they have mass market consumer based businesses and audiences. And so we said, well, what if we have a more sophisticated, higher net worth, kind of more corporate and investing crowd? What are some of the businesses that you can create there? And so that's what we've been focused on, is we want to continue to invest in the earliest stages, but then also we want to create these businesses and we want to optimize them, not to build, multi-billion-dollar outcome businesses that kind of burn cash for a decade, which is a very, good business if you've got the right company and the right scalability and it works. Instead, we want to build profitable businesses and continue to do that over and over again. And so far, at least there's early signs of success in doing it.
What are some of the examples of those businesses that are a good fit that you can help grow and build with the audience?
I'll give you maybe a full life cycle of one of these businesses. So we started a business about 2 years ago now called Reflexivity Research. And in that business, we basically said, okay, there's tons of research that exists in kind of the traditional world. They all have different, kind of shiny traps to them, right? Some of them are really, really smart on certain subjects. Some of them are really good on distribution. Some of them are really good in terms of a high price point and low volume. Some are high volume, low price point, right? And go and study all these different businesses. I had helped start a couple of businesses in the crypto space, specifically around research, but it was always more as kind of an investor. So I was early, but they really did all the work. And so when I looked at those businesses, I said, hey, each one of these kind of has a niche to it, but the one niche that no one has gone after yet is providing free research for massive distribution. Well, I have massive distribution in a certain sector. We're like perfectly positioned to pull that off. We don't have to pay to go build all that distribution because we already have it. So why don't we take the right product and put it through that distribution? So that's what we did. We partnered up with a guy, Will Clemente, somebody I'd known for a long time. He kind of had all the right values. He worked hard. He was curious and was into a lot of the data and research and all that kind of stuff. And the way that business basically worked is we put $500,000 down on the balance sheet. And we said, hey, we're going to be partners on this and let's go build a business. And so we began to hire people, et cetera. And the thesis was right. And that was pretty clear early on. But we actually struggled to figure out what is the right monetization method. Because if you're going to give away the research for free, well, who's going to pay you? And so what we began to realize was that the different organizations that were getting covered, they would basically turn the research on and they were willing to pay us for it. And so it became kind of a unique element where you say, okay, hold on a second here. We're doing research, but now you've got to do research on your customers. So again, there's challenges there, right? There's like journalistic things you've got to think through and worry about. There's how do you price it? All these things of like building a business. So long story short is we built it up, and about 18 months into the business, we had contracted over $1 million of revenue. Business was profitable. But I also, putting my investor hat back on, knew that we were in the start of a Bitcoin and crypto bull market. And so having been around for a while and kind of seen these cycles play out, I knew I'm holding illiquid equity. Well, if I'm holding illiquid equity, that's not that good in a bull market because I can't sell it when we get to the top. And so I said to myself, I said, well, what if instead we thought of the equity of this business not as equity, but we thought of it as economic value that we could invest somewhere. And so that was kind of the start of this long journey of saying, nobody really in my generation that I'm close with spends a lot of time in the public market. Everyone is over-rotated to the private market, but I bet there's opportunity in the public market. And so we did a lot of work, figured out a lot of different, potential opportunities, and we ended up settling on an opportunity where we sold that research business for about $2.5 million to a publicly traded company in Canada called DeFi Technologies. They were an asset management firm. They had crypto ETPs in Europe. If you have asset management, you need research. You put those together. Again, not a new original idea. People have been doing that for a long time. But what was unique is that we took 100% of that deal in stock. And so you can imagine people saying to themselves, hold on, doing $1 million of revenue. Why are you selling the business for $2.5 million? You're profitable. This sounds like a bad deal. We had made the analysis that we thought that the business we were selling to was significantly undervalued. So now you're playing a game where, hey, I'm an operator, but I'm also an investor. And I'm going to try to walk this line of using things from both sides of my brain to be able to make this decision. We sell a business. The stock went from 51 cents, worth a couple $100 million market cap at the time, to today, the stock trades somewhere between $3.30 and $3.50. So significant appreciation in that stock. It was undervalued. They've still continued to perform. So there was kind of a bet. You're looking at the management team and the products and all that kind of stuff. But what I learned from that whole exercise was we created something from scratch. We solved the problem. We were able to drive revenue. We were able to get to profitability. But then we had an economic asset. And it wasn't cash. But then we could almost flip from the operator seat to the investor seat and say, where do we place this economic value so that it will grow even faster than we could do by ourselves? And so that really, I think, kind of showing that we could start, scale, and sell a business put me onto this path of, well, why don't we start to do this more? Why don't we try to figure this out more? And can we actually work in reverse? Can we go and say, hey, there's certain types of public companies. They all need X. X doesn't exist yet. We should build it. When we get to a certain point of, either whether it's revenue, profitability, whatever, we can then go to these 5 different companies and we can create an opportunity for one of them to go ahead and buy it. But we want to take 100% stock. So we're actually willing to take a lower price on the sale because we're really just making an investment decision. And so my takeaway from this journey over the last 3 years or so is if you do what everyone else is doing, you get the same return as everybody else. And so you have to do something that is unique, different, kind of weird, frankly. And so my greatest pain in the world now is describing to people when we talk about what we do. Because it doesn't sound normal, right? It doesn't sound like, hey, we just have a private equity firm or something like that. But so far, it seems to, at least be showing signs of getting some traction.
So when you bring together this ability to build a company, some venture investing, selling to public markets, what's the structure of, let's say, your liability base of what box do you put this in?
Yeah. The way that we're structured today, we have a C corporation. We raised just over $12.5 million from a great group of investors, many that people would know. It's a combination of a couple of funds, but also a number of very successful kind of corporate executives, CFO of a large publicly traded company. The CEO has done $80 billion of public deals and things like that. And in doing that, I think that we really were trying to figure out what are we going to do? Right. And so if I knew today what we were going to do, would we have raised capital in the same way? I'm not sure. There's pros and cons to having it in the corporate kind of structure versus maybe a fund or something like that. But I do think that one of the things that we have benefited from or seeing firsthand is this idea of kind of raising once and then never having to raise again. And so I think people are talking a lot about artificial intelligence and that being a thing. By optimizing these businesses for cash flow, in a way, you're getting non-dilutive fundraising on a quarterly basis. And so we are fundraising. It's just not in a traditional sense. But that C Corp, there's tax advantages to kind of having everything inside of the C Corp rather than it being, me personally or some other structure. And then it also allows us to play kind of an offensive game of you have a balance sheet. That balance sheet can be used to start companies. We could acquire companies. We can invest the capital. And so, again, going back, not new, When I started doing this, I was like, oh my God, this is like something no one's ever known. Like, how am I ever going to learn from anyone? And then like very quickly, you're like, wait a minute, Virgin Group, Icon, Coke Industries, Berkshire Hathaway, and we just go down the line. There's a ton of these. And I think what people really start to think about is like, rather than think of it as being an operator and an investor, maybe you just end up being a resource allocator. So you're allocating people, you're allocating money, you're allocating time, but at the end of the day, you're just playing an allocation game. And so that's probably no different than Jeff Bezos running Amazon, right? He doesn't think of it as like he's got some super, secret structure. But at the end of the day, like he's making investments for the future. He's building things, he's acquiring things, he's selling things, he's serving a customer, he's dealing with shareholders. And so it is kind of just a company, right? Which doesn't sound that way when you describe kind of what you do. When you think about the comparisons, I think it's much more of a company than anything else.
How do you think about the allocation of your time between the investing activities and the platform, the brand building, the audience building activities?
You're asking the hard questions. Whatever we do, we're wrong, is the conclusion I've come to. So if I spend all my time on building the audience, the businesses will suffer. The investing will suffer. If I spend all my time on the business and investing, then the audience and content suffers. And like, that's the engine. And so what we've come to the conclusion of is you need someone to play this specific role. I kind of think of it like a basketball team. The point guard can't play center and the center can't play shooting guard. You kind of need a specific person to do this. You need someone in this role who has a very high capacity for work, because you basically have to do both. You have to do all the content, and then you also have to be able to run the businesses and invest. And so my day probably looks like a nightmare to most people. I thankfully am like, I'm having a blast, right? This is awesome. I can't believe I get to do all this stuff every single day, but you just got to fit it in. And so it's not uncommon for me to record 2 or 3 podcasts in a day. I write every morning. I'm doing all of the tweeting myself. Then I'm meeting with our teams. I'm evaluating new businesses. I'm managing the investment portfolio, I'm trying to hire people, putting out fires throughout the day. And you look at it and you just say like, maybe actually the chaos is why I'm so happy. And there's a guy that I met recently who he was on SEAL Team 6 for 10 years. And when I got introduced to him, it was, hey, this is a guy who's in the military. And then my buddy, right before I talked to him, was like, he was in the SEAL teams. Okay. And then like when I'm talking, right, it's like, oh no, he was on SEAL Team 6. I'm like, okay, like you should have told me that in the beginning, right? And he had been at a job and he basically goes into these companies. He has no responsibility to start, but by the time he leaves, everyone reports to him. Like finance, operations, like just everything reports to him. And then he leaves. He goes to the next one. Starts out, nobody even really knows he's there probably. And then by the time he leaves, everyone's reporting to him. And he had done this like 3 times, like fairly quickly. And I said to him, what's up with that? And he said, dude, I'm a SEAL. He's like, no 2 days were ever the same. He's like, I thrive in the uncertainty and the chaos. Like I need that. I wasn't a Navy SEAL. I was just a little, a nobody in the infantry. But I think it's very similar, is that the uncertainty is actually where I'm most comfortable. Like if you said to me, design the worst job in the world, it would be like a traditional 9 to 5 where I go and I just do the same thing every day. It would drive me crazy, right? I'd be like, oh my God, I don't get to talk to people. I don't get to do stuff. Like this is horrible. And so when you begin to learn about yourself and like what makes you excited and energized, et cetera, I think then that gives you the confidence to say, I know most people will say what you're doing is too much or focus on one thing. But you say to yourself, if I only do one thing, I won't be happy. And so the challenge in life is like, can I do what I want to do and be happy? So far it's working, no guarantee it will continue to work, but definitely a different path.
So on top of all of this, you decided to write a book.
I need more chaos.
Talk to me about the impetus of why you put this book together.
My wife wrote a book and I want to sell one more copy than her. No, I think I never thought I would ever write a book. I'm not somebody who kind of thinks in that manner. For all the content I create, et cetera, it was something that being married to an author, a writer, a journalist definitely helps. But when my first child was born, my wife really pushed me. She said, hey, you should write a letter to her. And I remember being like, what am I going to say in this? Like, okay, like I'm kind of doing it for you, right? Like I'm not actually even doing it for the kid. I'm doing it for you at first. And I remember the first time I went back and I read it, and it's pretty bad. It's like, thank you so much for making me a dad. I'm so excited to, hang out with you, and very kind of fluffy and just like, I'm almost kind of going through the motions. And frankly, I don't even know if I knew what to say, right? It was like, I was like a brand new dad and I was just excited, but like, I don't know if I'm going to be good at this. And so when we had our second kid, I'd written another letter, I think at maybe the 1-year birthday or something. And then we had the second kid. And that's when I said to myself, I probably, if I'm going to take the time to write this, like impart whatever little knowledge I have to this person so that, one day they're going to read this. And so I started writing, and for whatever reason, the format of writing letters is very easy to me. And I think there's something about, I was writing to a specific person. If I sat down to write a book and it was like, write a book about X to the world, I don't think I actually would be very successful at doing that. But writing to a person, especially to my kids, was like very clarifying. And so, I don't know, 4 or 5 letters or whatever. I was like, hey, I kind of like enjoy this. And I think I started to realize I was getting value out of it for myself. Like it was forcing me to think about things I had learned. It was forcing me to articulate these things. And somewhere between 5 and 10, I remember saying to myself, like, I know the like hard path is to like make this into a book. I know I should do that. I know that that is like the thing that probably my kids would enjoy. It would be good for other people. I really don't want to do that. And my wife pushed me. There was a guy, Craig Pierce at a Harriman House. He pushed me. And I said to myself, if I tell myself I'm going to do it, I may procrastinate, but I will do it. Right. And so I decided to go ahead and write the book. And it's a great forcing function, frankly. And, I've told the story before, but one of the best things I did in the book writing process was I told Craig, I said, hey, so this is going to sound insane, but I need to meet with you every Monday at 9:00. And he was like, what? He's like, most authors are like, hey, I'm going to go write the book. Leave me alone for 9 months. I'll come back. He said, what do you mean you need to meet me? And I said, well, here's the deal. I'm not going to write the book unless we meet every Monday, because I know if I show up on Monday, I'm not going to disappoint you. So if you tell me I need X number of chapters or letters or whatever every single week, I'll show up with them on Monday. But if we don't meet, I know I won't do it. And so every Monday we start meeting and I show up and he's like, okay, we're on a roll. And at some point he comes to me and he says, I'm going on vacation for 2 weeks. Don't be immature. Just write the letters while I'm gone. When I come back in 2 weeks, send them to me. Okay. He comes back. I didn't write anything. And I said to him, Craig, look, I know that you're disappointed in me, but I told you if we don't meet, I'm not going to write the letters, right? Like, I know it sounds insane, but like I got a lot of stuff going on. There's no forcing function, whatever. I know myself. I need to have that, constant forcing function. And so by the time the book was done, I frankly was like, I'll just keep writing these. Like, this is like amazing. I'm enjoying this. And I think the biggest thing I took away was how many times in my life did I ever stop to clarify my thoughts? I just really didn't. Right. And so that was really the impetus for it, was I think that I started to realize, although I'm writing this to my kids, I'm getting a ton of value out of it. And maybe it's a selfish act that I'm, pursuing. What
were some of your favorite letters?
The one that is definitely most controversial, which I don't think I was surprised, is Luck is Not Real. And I don't know when I started to think about this, but I noticed that everyone always says, I got lucky. I got lucky. I got lucky. Oh, that happened to me. That's bad luck. Oh, that happened to me. That was good luck. And I just remember thinking like, what is luck? And so maybe I'm curious, maybe I'm an idiot. I don't know. But I started like Googling and and I came to the conclusion, I was like, this is fake. Like luck is not actually a thing, right? Probability is something that is repeatable and can be proven and you can measure and do all this, like a mathematical concept. Luck is actually a psychology concept. And so the best way to describe it is if you and I are walking across the street, we get hit by a bus and we both lose our leg. Go to the hospital. Somebody shows up and they walk over to your bed and they say, hey, Ted, what happened? I say, I was so unlucky. I was walking across the street. This bus hit me. I lost my leg. Oh my God, my life's ruined. They walk over to my bed and they say, what happened? You say, oh my God, I was so lucky. I was walking across the street. I got hit by this bus. It only took off my leg. I'm still alive. How lucky am I? So same exact situation, same outcome, two completely different perspectives determine what is luck. So I started looking more. And then I came across some studies that showed you can actually become more lucky by simply telling yourself you are lucky. And so it was like, okay, this is definitely a psychology thing. And so what I realized was luck is actually poison because it strips people of agency. So if you constantly rely on luck, if you constantly fall back on good luck, bad luck, what you're saying is that you have no agency. So what people normally do is if something doesn't go their way, they don't say, oh, I should have worked harder. Oh, I could have done this. I could have done this, whatever. They say, oh, I was unlucky. I'm an unlucky person. If things go their way, they don't want to come off as arrogant. They don't want to say, I worked hard for that. I earned that. They want to say, oh, I got lucky. So you hear very successful people always do that, right? And so it's this weird thing where actually the extremes, the people who end up not being successful and the people being very successful, they both want to strip themselves of agency in conversation because the people who are not successful want to appear like no matter what I did, this is where I was going to end up anyways. And the successful people don't ever want to come off as you can do this too, you just didn't work hard enough. And so this idea of like luck is not real, the funny thing is it's a very real conversation because it then says back to you like you have agency, what you want in life is just on the other side of your actions. And so if you don't want to be fat, don't eat bad food, right? If you want to, have a lot of money, like do the things that create a lot of money. So definitely controversial, but probably my favorite one because it required a lot of kind of exploration to come to the conclusion.
There are a bunch of them that I guess you could say touch on investing, not through imparting specific investment lessons to the kids. What about bad news? Certainly the case of venture investing. Love to hear your thoughts.
Yeah, I learned this at Facebook. Bad news does not get better with time. And I've actually learned it a couple of times, which maybe tells you I wasn't a good student on this one. But at Facebook, one of the things that I knew going in was that I was not good at interviewing, identifying, and hiring talent. And not because I had made any massive mistake before, but I didn't have the confidence in doing it. And so I was kind of flying blind. And I felt like when we had ever hired anyone in the past and it had gone well, it's kind of like, I think I just like, that was the odds. The right person walked in at the right time. We said yes. If it didn't go well, you're like, maybe that's actually my skill set. And so I said, I want to get better at this. And at Facebook, the interview process, there's a bunch of screening and stuff, but really the kind of meat of the interview is you go and you talk to 3 product managers, and each one has a specific kind of thing that they are trying to evaluate. So are you a culture fit? Can you do the job? And I forget what the third one is. So when I was at Facebook, I think over a 12-month period, I did something like 150 interviews, 120 interviews. So some number over 100, that was a lot. And the reason I know that is because they kept track of how many product managers did interviews and how many did you do. And so they would constantly be trying to get people to do the interviews. But if you think about, it's taking you away from your job. So nobody really wants to do it, but everyone also wants to make sure their colleagues are good. So there's like this constant, healthy tension. But because I wanted to get better at it, every time they would ask, I'll do it. And my favorite track to be focused on was like, can you do the job? And so they taught me the way to conduct the interview is basically give a hypothetical situation, a kind of war game through a scenario. And so the scenario I would always propose to people is, hey, you're responsible for a product. You go home on Friday afternoon. Everything is working great. You come in on Monday morning and 50% of the traffic to your feature has dropped. What do you do? And I asked this question to probably 100 people. And so what that allows you to do is you really start to calibrate what a good answer looks like and what a bad answer looks like. But only once ever did somebody say to me immediately, the first thing I would do is I would alert the team we had a problem. Everyone else would jump to, I would call and look at this dashboard. I would, do this. And like they would get into the war game. But this one person who was very senior, who obviously had worked in these teams, that one sentence immediate was a strong hire for me because it was so clear they understood how to work in a team. They understood this idea of like bad news doesn't get better with time. And so it is something where bad news people don't want to share naturally. But if you have a mentality of, I want to solve problems, well, people can only solve the problem if you share the news, right? If you tell people there's a problem. And so it does really illuminate this idea of like, are you playing one-on-one or are you playing 5-on-5? If you're playing basketball one-on-one, yeah, offense, defense, rebounds, everything's on you, right? Like either you succeed or you don't, and you better be better than the person in front of you. But the problem is that in business, when you're facing problems, you're not playing one-on-one, you're playing 1-on-5. And so the problem is actually probably bigger than just you yourself can solve. So what you want to do is you want to play 5-on-5, right? You want to have your team there with you, like run into the battle with as much ammunition as possible. And so sharing that news is really powerful.
So you have these two chapters next to each other. I'm going to name them both.
Of course you want to talk about them.
Rich people sell too early and buy great assets and hold them forever. How do you hold that cognitive dissonance in your head?
It's a great paradox of investing, right? There's many ways up the mountain. And so Jim Simons, very rich man. So is Warren Buffett. Could not have different investing styles. And so if you think about for the individual, which really I think from the book perspective, you're not trying to educate an institution on how to invest. You're really talking to an individual. Both are true in your portfolio. So there are times where you bought something, you started something, and there's a natural life cycle to it. It created a lot of value, but at some point it gets overvalued, or it, market dynamics change, or competition changes, or whatever. And what a lot of people I think will say are their regrets in investing is not actually the opportunities they missed. It's that they give back returns that they had. So I bought something at $100. It went to $1,000. I'm a genius. There's a 10-bagger. Oh my God, it's back to $200. Now I'm only going to make $100 on this investment. How stupid am I? Well, maybe it was going to go to $1,000. Maybe it was going to go to $1,200. Maybe it was going to go to $800. But if you had sold at $600 and taken your 6X, done okay, right? And so it's very hard to do. It's painful watching it continue to go up after you sold it. But I do think that there is this idea of like all the rich people I know at some point sold too early, and they were okay with that. They were satisfied. At the same time, all the rich people I know have at least one asset that they bought at some point in their career, and they just said, I'm never selling this. Real estate people, it's usually like commercial real estate. Now Bitcoin investors, I'm going to take the Bitcoin, I'm going to give it to my grandkids. Warren Buffett, buy things and hold them forever. So this is a timeless investing principle. But what makes it so difficult is as an investor, both of these things are true. When you bought that thing at $100, which bucket does it go in? And so from my perspective, the reason why I put them back to back is to really highlight the paradox, which is you may actually at the same time in the same portfolio be pursuing two different strategies. And your job or your challenge is to figure out what's in my bucket of no matter what happens, what changes, I'm holding forever, and what's in my bucket of when it hits a certain price target or something happens, this is kind of my off-ramp to this investment. And to kind of pull this full circle, I used to think that the hardest part of investing was buying the right assets. And I'm now fully convinced that the hardest part of investing is selling correctly. And I'll ask every investor I meet, how do you think about selling? And to this day, the only good answers I've ever heard are people who throw their hands up and say, I sell knowing I'm wrong. Right? So maybe I sell half and I hold half. Or I talked to a very well-known early stage investor and he said, when a company goes public, I break it up into 3 tranches. First day it's liquid, I sell day 1. The next third I sell over the next, 18 months. And the last third I hold forever. And he goes, and if it's a good company, that last third makes me wish that I held the first 2. If it's a bad company, I'm glad I sold the first 2. And the last third, that's my tax for not knowing. And I thought that was like a very good, kind of take the decision-making out of your hands, figure out your system that makes you comfortable, and then just go and make sure you're always disciplined with it.
What works best for you?
Still figuring it out, right? Look, and what's interesting is when you're building and investing, this doesn't just exist in the investment portfolio. It also exists in the building portfolio. So I always laugh that Google, they just got a little bit more money offered to them early, they would have sold. But man, was it a blessing in disguise that they ended up not selling, right? Facebook, on the other hand, I think they got offered $1 billion and Zuck wasn't even interested. He was just like, no way. And so I do think that there is something about as long as you are able to take some money off the table and then think structurally like most assets over a long period of time should go up, especially in the public markets and kind of liquid assets, maybe that's what you should do. Right, is maybe just, hey, take your principal plus a single turn on the capital or something and then let it go. And what makes it even more hard is like, depending on your age, and your risk profile and the percentage of your portfolio. I recently met a guy, I don't think he was the operating founder, but he was like a co-founder from, I think he provided some capital and some advice, but it's a publicly traded company, and he owns $120 million of the stock. He's never sold a share. And so he's going through the exercise of, okay, I don't have a lot of money in my bank account, but I got a lot of money over here. How do I transfer some of that money into my bank account? I don't want seller's remorse, but I also don't want holder's remorse. What do I do? And so, I mean, you can go deep down the rabbit. There's options, collars, and he was going through the whole thing. And I remember just saying to him, I said, look, I don't know your whole situation, whatever, but what I do know is, can you tell it to me in one sentence what your strategy is? And I think that'll clarify for you what you should do. And he was funny. He thought for a second and he just goes, sell. I said, you didn't even need the full sentence. You just needed one word, right? So you made $120 million, man. Congratulations. Like, go live your life. Pretty good outcome.
So what's been the impact of the book?
The single most rewarding part is how many dads have reached out to me and said, I wrote my kid a letter. Not a lot, but a couple have even sent me the letters. And you read it, and they're the type of thing where I show my wife, and I'm like, this guy wrote a 4-page letter to his kids because he read the book that I wrote. Look at this. And you read it, and you're just like, it's like raw emotion, right? And you're just like, this man has kept these emotions bottled up. Like this is the first time he's like letting it out, right? And you're just like, I hope his kids appreciate it, right? But I think that's been the coolest part. And then the other part that has been rewarding to a degree, but if I ever write a second one, I will be more cognizant of, is every person that works for us weaponizes the book against me. They got 65 different life lessons that they selectively choose when to remind me I put them in the book. There's one that says, take work off your boss's desk. So I have somebody who came to me and they said, I don't want to do my work. I'll take work off your desk. And I said, why don't you do your work first and then you can come over here, right? So that type of stuff it's always fun, right? But I do think that just knowing that people are reading it and kind of internalizing it is pretty rewarding as well.
I want to ask you a couple of closing questions, but I have one to ask you before that, which is, you mentioned your wife's an author. You write a lot. Your brother writes this great sports blog. What is it in the DNA or the water or both that's perpetuated all this writing in your family?
Maybe we're just competitive. I don't know. I do think that there's an element of, there's like a healthy competition in like the most loving way of, if I figure something out, I want to tell them. If they figure something out, they'll tell me. But also to an element of, my brother, he's growing pretty fast on Instagram right now. I know he won't say it, but I know he's just like, when I pass you, you're never going to hear the end of this, right? And then I'm like, maybe we should post a little bit more on Instagram this week, right? I can't let this guy catch me. And so I do think that there's like this healthy thing. And you see it on, again, go back to sports teams, right? Like the best teams, Michael Jordan, Scottie Pippen, Steve Kerr, like they're all competing, but it's for a common cause. And so I think that there's an element of that. It makes everyone better. In terms of writing in particular, I think that there is something very clarifying. You can't be a clear writer if you're not a clear thinker. And so writing is the most selfish thing I do. I think that it's somewhat therapeutic, frankly, but also it really forces me to take all these disparate data points and information, et cetera, and kind of clearly articulate it in a single, 750,000 words each morning. When you think of that, everything I do throughout the rest of the day is informed off of that. I can pull ridiculously minute data points and details off the top of my head because I sat down and I wrote them. I did the research, I figured it out, right? I had to craft this whole thing and then I read it after I wrote it. And so if you think about my brother, my wife, et cetera, I think that there's an element of that as well. Is like they're learning and the writing is the output. And so when you're around people that like to learn, I think you guys all kind of gravitate towards each other. And so there's no one thing. I wish there was like a magic water, right? We'd probably be handing it out to people. But I just think it's like it becomes cultural. And then also there's the competitive aspect that, that's probably the more fun part.
All right, Pomp, got a couple of last questions for you. What's your favorite hobby or activity outside of work and family?
Reading. Yeah. I really enjoy, I think, sitting and reading physical books. I used to do a lot of audiobooks and Kindles and stuff like that, but I really like the physical books. And I surprise myself with, although I read all week, Twitter and, emails and news and all that kind of stuff, the time spent per like insight gleaned from a book is still off the charts compared to, the noise of the internet. And so it's very enjoyable.
What's one fact that most people don't know about you?
We're talking about competition. I was named most athletic in my high school. I'm pretty proud of that. No, but I think that the most rewarding thing to me work-wise was a lesson I learned maybe 6 or 7 years ago. I remember I met with a asset manager and I said to him, what's the thing that, I've been doing for 30 years or something. So what's the thing that you're most proud of? And I'll never forget this answer. He said, my sales guys drive Ferraris. And I remember being like, wait, like that's the last thing I would have thought he said, right? And I said, what do you mean? And he said, we have been so successful that it doesn't matter what your role on the team was. Everyone on the team won. And that just stuck with me. It was just like, what a cool thing to say. And so I love looking at like Amazon goes public. How many millionaires, or NVIDIA is like the latest one. I think it's something like 25,000 people at NVIDIA have a net worth of like maybe definitely $1 million, but maybe even over $10 million. And you look at that and you're just like, Jensen started 35, 40 years ago, right? Like what an impact. And so the fact I care about that and like I kind of like obsess over that. And I probably know more about a lot of our teams like financial state because of it. And I know what some of them aspire to make, what some of them aspire to do with their financial goals, things like that. It's just like, once you know, it's much easier for them to accomplish it because you try to help them get there. And so it's a very kind of different culture maybe than, most companies. I think it's like, keep your personal stuff personal and don't talk about it here.
What's your biggest pet peeve?
It's probably the intersection of laziness from a work ethic standpoint, a lack of ambition, and a disregard for quality. One of the things that I think I've learned over time is like, if you think about a professional sports team, the product they put on the field tells you everything you need to know about the ownership and the management team. And sports is always this interesting thing because all they can do is put the right people together. They get all the players, they get the coaches, they say, do your thing, here's the product. But if you look, usually the teams that are not good for a long time. And they tend to be the owners that are less involved or, less kind of enthusiastic. They usually are the owners who've owned the teams for a long time. And so it kind of feeds into all this. So it doesn't mean that they're lazy, but it just means like the product they put on the field is not something that maybe they would have done if it was their first year. And so I think about the same thing in professional life of what is the product that an individual is putting on the field? Is it something that they're actually proud of? And, one of the aspects maybe that I'm most proud of over the last, 3 years or so is when I was thinking about, okay, we have to name the company. There's a lot of names. You could name it after yourself. You could name it after some random thing. You could name it after a place or, there's all these kind of heuristics people use. And I remember saying to myself, I just want to think of one word that summarizes everything that I want this company to stand for. And so we named it Professional Capital Management. And I wrote something to the team when we branded it that way. And I said to them, that is the bar. What time should you come to work? When would a professional come? What should you wear? What would a professional wear? How should you conduct yourself in the meeting? What would a professional do? It just became this very clarifying, kind of framework. And everyone doesn't have the same idea of what a professional is, but it really focused people on there is a standard of excellence. There is this professionalism. There is this, kind of desire to do something different. And so what it did was it really also clarified the excuse, well, everyone else does X, doesn't apply here. Because you could quickly say, I don't care what everybody else does. And that's when I realized I'm turning into my own father, which is, saying that over and over again to his kids for years finally seeped in. And I feel like maybe I learned a thing or two.
Which two people have had the biggest impact on your professional life?
On my professional life, Mark Yusko and Jason Williams. So I met Jason in either 2015 or beginning of 2016. Jason was probably the first person I'd ever met that had been very successful from a business perspective. He had acquired, pretty good financial resources, but he was still incredibly down to earth to the point where you could go and get a beer with him for 4 hours and feel like you were talking to your best friend from high school. And, tattoos, a little bit longer hair. He's not cool, but he thought he was cool, right? And I think that he probably took a bigger bet on me than he was realizing. And there was definitely times where I was probably a pain in the ass because I was really stuck on doing something a certain way or, whatever. But I think he was probably just mature enough to realize like sometimes you got to let young guys run and like, let's see what happens. And so that was really effective. And then I think the second one is Mark Yusko. And really, I think what Mark taught me about the institutional world, but also I think Mark taught me that you get old if you don't hang out with young people. And so he constantly was looking for who are the young people, who are the people I can hang out with, how do I continue to learn, how do I stay, interested in this stuff. The guy takes more notes in meetings than I've ever seen. I used to joke like, dude, your hand's gonna fall off, right? But just like he wants to learn. And so you see that and you start to say to yourself, okay, in your professional life, the people that end up having an impact mirror a lot of, my mother and my father who had the biggest personal impact on me. And so actually you're getting from both sides the same lessons. They just come in different boxes. And there's only so many to learn. But what you really need, at least what's worked for me, is like you want the reinforcement. You got the professional reinforcement of the personal lessons. And the best investors for sure are, maybe they're just philosophers. And, capital allocation is the output.
All right, Pomp, last one. What life lesson of all these you've written about in your book, perhaps, have you learned that you wish you knew a lot earlier in life?
I learned at 20 years old that we all die. It's very morbid, but there was a specific incident in Iraq. There was somebody who died. It was a very kind of horrific situation. And I remember leaving that day and, you're a mess of emotions, right? You're mad, you're sad, you're confused. You're frustrated. You probably feel guilty to a degree as well. There's just like this whole thing. And I remember I got back to the base and everyone, when something like that happens, it's just chaos, right? I mean, just you're not allowed to call home. And in a moment of pain like that, I think there's a lot of people who are like, I just want to talk to someone that like I love or I care about or whatever, but they want to notify the family before anybody else shares the news, et cetera. And so I remember thinking to myself, what is the lesson I can take away from this? And I came to the conclusion it's that we all die. Today was his day. Could have been mine. It's not. But one day it will be. And so what can I do tomorrow, the day after, et cetera, to squeeze as much out of life as possible? And the greatest blessing of my life outside of probably being born to the family I was born and the environment I was born and, having parents that cared about me, et cetera, is I learned that at 20. There's a lot of people that don't learn that till literally they're on their deathbed, right? And so at 20 years old, I think there was kind of this inflection point in my life where I said to myself, there's a different life that I want to lead. Not that I was on some bad path or something, but just like I want to get as much out of this as possible and really enjoy it. And so I probably became more optimistic. I became more enthusiastic. I became, just like more excited. The only thing that I would caveat is when you learn that lesson at 20, you do go through like a 3 or 4 year period where you like buy a motorcycle and go too fast and like really test the limits of, like, is today my day? But after you get past that, then it's like this fantastic thing. But yeah, I don't know how else people can learn that other than, maybe you can read about it, but you probably got to experience something. And it was incredibly valuable.
Well, Pomp, you start every day with a tweet or an X tweet that today is going to be a great day. Let's get after it relentlessly. And I just want to thank you for sharing just a little ounce of that relentlessness with us.
Thanks so much for doing this.